Okay, so before we continue with the with this session, I just give a quick glance over the previous sessions that what we have covered in the previous session. So previous session was the second session or second session of your learning outcome one, right? So in this second session, we cover various things. So first of all, we studied about a cost accounting system or cost accounting method. So this is the types of the management accounting system. So in this cost accounting method or cost accounting system, we study various things. So in the previous session, we covered the various things regarding the cost accounting system. That is, what is the meaning of cost, why cost accounting system is important for the organizations, different types of cost, could be fixed cost, variable cost, cost of goods sold, non-manufacturing cost, step cost, semi-variable cost, all these kinds of costs we covered in the previous sessions. And then second important things of the previous session was inventory management systems. Inventory management system, we studied the various things. We studied about GIT, GIC. We have two different methods that help us to manage the inventory. We also call it pull and push techniques. Besides these two techniques, in inventory management system, we also studied about economic order quantity. What is the purpose of economic order quantity, which help us to make the balance between ordering cost and the holding cost, right? And third important thing studied in the previous session was a price optimization. So which means how companies determine its price, what kind of methods company use it to estimate the reasonable price, or which factors affect the pricing decision of the organizations. So that was more about price optimizing system. So that's the three things that we covered in the previous session. So let's continue with the today's session. So remember, in the previous session, we forgot to cover about costing method, which is job costing. All right. So these three things belongs to the previous session, and the fourth thing, costing method. Remember, still we are on the second session for your learning outcome one. Right. So now, what is a costing method? Right. Costing method means the method company apply to estimate the cost of its product and services. That's called costing method. Different organizations, they apply different method to calculate the cost of its product. All right. So in order to understand costing method, so I'm going to draw a small diagram that's help us to estimate the costing methods. Right? So let's start with the organizations. Right. Organizations divided into two parts. There are two types of organizations. In these two types of organizations involve profit making, right? And second one is a not for profit making, right? So in simple words, profit-making organizations are those organizations, they want to make profit, right? Their objective is profit maximization. Their objective is to increase the value of shareholders. So whatever shareholders they have invested in that business, so that business objective to increase the investment or increase the value of its shareholder. In simple words, objective to maximize shareholders' investment or shareholders' money, right? That's called profit maximizations companies, right? Google, Sony, Samsung, Apple, in Vietnam, Vinamilk, or different kinds of banks, could be a Secom banks or a Techcom bank or Commonwealth Bank, ANZ Bank. So all these kinds of companies are profit-making organizations. In other words, we can say that private companies, also known as profit-making organization. But remember, all the private companies are not profit-making organizations, right? But majorities of private companies and businesses are part of profit-making organizations, right? Now, not-for-profit making. Not-for-profit making organizations are the companies, their objective is not to make profit, but their objective is to provide these services to this society. All right, in simple words, they much more focus on providing the free services to the organizations. Free services to the societies, to the people, to the environments. That's called not-for-profit. In other words, we can say that charities, organizations, the organizations, they are mainly involved in charities, all right? Could be help to the poor people, help to the disabled people, or help to the old people or old cares, right? So that's our mainly not-for-profit making organization. Another example of not-for-profit making organizations are the government companies, right? So remember, not-for-profit making could be private companies and government companies. Private companies like SOS is an example of private not-for-profit making companies in Vietnam, SOS, all right, or UNICEF at international level, all right? So, or probably a Red Cross Society. So these are the examples of the private not-for-profit making organizations. And public or the government not-for-profit making organizations involve government schools, government hospitals, right? These are the example of the company which are part of not-for-profit making organizations. Their objective is not to make money, providing government universities or schools. What is objective? Objective to provide the free education or low-cost education. Why they are low-cost educations? Because their objective is not to make profit, all right? So that's why they much more involve to support or to contribute the society developments, right? So this is known as not-for-profit making organizations, all right? So remember, in this module, we focus on profit-making organizations. We will not discuss much more about not-for-profit making, because since we are talking about cost, profit, sales, so which means we are profit-oriented. So we target only profit-oriented firms or companies, right? Okay, so move on. So these profit-making companies divided into two parts. So there are two types of profit-making companies. One is a manufacturing companies, right? And non-manufacturing companies, right? Manufacturing companies means they involve in productions. They produce product. Product means something which is tangible. We can see, we can touch, right? Non-manufacturing companies, they do not involve in producing product, but they involve in providing services. Services means buy product and sell product. They are not producing, they're just providing services. Services could be selling product or selling services, but they do not produce anything, right? That's called non-manufacturing companies. Manufacturing and non-manufacturing, right? Okay. Now, these manufacturing companies, they need to calculate the cost of product that we study in the previous session. It's really important to estimate the cost of product, all right? If our cost estimation is wrong, our price estimation or price determinations gonna be wrong. Why? Let me give you a quick example of the previous session. Previous session, we studied about here, price optimizing, right? We studied one method. We studied one method in price optimization. What is the purpose of this method? With the help of this method, we find the price, right? We find the price of the product. So what this method known as? This method known as cost plus pricing, right? Cost plus pricing. So here, cost plus pricing. So what is the formula of this cost plus pricing? Cost plus markup, right? Cost plus markup equals to the price. So which means if you want to calculate the price of the product, you have to addition markup in your cost. You have to add markup in your cost, right? Now, so remember, if your cost has a problem, your cost has a problem, your price has a problem, all right? Idea is, in order to find the exact price, it's really important to find exact cost. If your cost has a problem, your price has a problem, right? Keep in your mind these things. That's the learning from the previous sessions, right? So that's why it's really important for organizations to apply right method to estimate right cost, right? Right method to estimate right cost, right? If method is wrong, your cost calculation, cost estimation is wrong, price wrong, decision making will be affected, right? So that's the ideas behind costing method. So that's why costing method, very important, right? So now, manufacturing companies. So in order to estimate the cost of manufacturing companies, we have to study 4 methods, right? We have to study 4 methods. And for non-manufacturing, we have 1 method. So total, we have 5 costing methods. 4 belongs to manufacturing and 1 belongs to non-manufacturing. So means for all non-manufacturing companies, we use only 1 method. But for all manufacturing companies, we have to apply 4 different methods. All right? Okay. Now the question is, why manufacturing companies has 4 methods and non-manufacturing company has only 1 method, right? The reason is the nature of manufacturing products. Even though among manufacturing products, their nature is different from each other's, but all non-manufacturing organizations, or of course their services, has a same nature, which is intangibility, right? Why we have 4 different methods? Let me give you a quick example why we have 4 different methods. Remember, if your manufacturing process change, your cost estimation will be changed. Of course, different way we use it to manufacture the product, we have a different estimation, different cost estimations, right? Let me give you a very quick example. Manufacturing. The example is the product which is solid in nature, right? Solid, right? of course, manufacturing, and the product which is liquid in nature. Both are manufacturing, right? Both belongs to manufacturing sector or manufacturing industry. But one product is liquid in nature and another product is a solid in nature. The manufacturing process of these two products are different, right? So that's why when we are estimating the cost of these two products, we have to apply different methods. We cannot apply one method for those kinds of both kinds of manufacturing products. That's the quick example for you to understand that why manufacturing organizations, they have different costing method. Even though all comes in a tangibility's nature, but still because of their processing system, we have to apply different methods. However, all kinds of non-manufacturing companies, they have a same in nature, right? Which is all services, all kinds of services are intangibles, right? So keeping in mind this thing. So now 4 methods. And 5. Right. So total we have 5 methods. So first method is a job costing. All right. Second one is a batch costing. Third one is a contract costing. And fourth one is a process costing. And here for non-manufacturing, we have service costing. So all these methods, I'm going to explain you one by one. Right? Let's start with the first one, which is job costing method. In order to apply job costing method, we have to set the criteria. If any kinds of product or any kinds of products production meet that criteria, then we apply job costing method. If it does not, then we look for another method. Could be batch, contract, or process. All right. So let's find what is the criteria to apply job costing method. Right. So the criteria involved the first thing is product must be single in nature, right? Product must be single in nature. Single in nature means when customer comes to order that product, customer normally, not exceptionally. Generally, customer order just a single product. Customer do not order more than one, right? If we have that kind of nature of the product, we will apply job costing method to estimate the cost of that product, right? Second criteria is a time. That product does not take too much time to complete or to finish, right? It doesn't take too long to get ready. It's prepared in a short period of time, right? Product is a single in nature, and the processing time or completion period for that product is short. It doesn't take too long to be ready, right? That's mainly the requirements to apply. That's mainly the requirements or criteria to apply job costing method. All right. Now the question is, what is that product? What kind of product is single in nature and have a short period, right? Short time. The example of that various products, but I can give you one example. The example is a birthday cake, mainly bakeries kind of business, all right? We need, I mean, we buy for cakes for different occasions, all right? But when we are buying a cake, normally we do not buy more than one, but it's quite exceptional situations that we are buying 2, 3, or 4 cakes. But generally, for let's say someone has a birthday, right? One person has a birthday. We're not going to buy 2 or 3 cakes for that person, right? We are buying one cake for one person, right? So that's the nature of the product, right? Or the nature of that kind of product for particular business, right? And second requirements, which is time. You know that birthday cake doesn't take too long to get ready. Maybe 1 day, 2 day, or maximum 3, depends upon how busy is that business. But generally it takes 1 day, right? To decorate different, to decorate the product, right? One more requirements I should mention here for job costing. So requirements criteria 1, 2, and 3. Third criteria is products are unidentical. Products are unidentical. So means every product is different with other products, right? Different than the other products. Even though birthday cake, right? It's less likely to have a same birthday cake. Even though, but sometimes even birthday cake is same, the writing the name and decorations and presentation of that cake is quite different from the other cakes, right? It's very less chance that both, I mean, all kinds of people like same kinds of cakes. Some people, they like probably vanilla flavors, some like chocolate flavors, some like, I don't know, chocolate cookies flavor, whatever, right? So that's why one product less likely to be identical with the other products. No chance. Very, very exceptional case, right? Or maybe some kind of like coincidence that both people like exactly same taste, right? Or same size, same color, same flavor, depends, all right? So single, time, right? And unidentical. This is the criteria to find whether we can apply job costing or not, right? So the example is a birthday cake, right? So another examples could be bouquets. I mean, a bunch of flowers, right? So that's normally we also buy for different occasions. Could be a wedding, or could be a birthday, or could be any kinds of inaugurations, right? So we are buying a flowers bouquets. Exactly, flower bouquets has the same nature. It's a single. Normally we buy one big bouquet with a bunch of flowers, all right? To get ready, that's bunch of flowers or bouquets. Doesn't take too long to get ready, right? Third thing is it's unidentical, right? So one flower bouquet, normally I like the size, I like the flowers, maybe not the same to the other people. They like it, they want something different, right? So that's kind of business. We apply job costing method, right? Okay, now move on to the second one, what is the criteria or requirements to apply batch costing? As you can see the name, batch. If any product which is impossible to sell in single units, or it's impossible to produce in a single units, for that kind of product, we apply batch costing, right? So any kinds of product that normally we produce in a bunch or bulk, right? Not in single. It's quite, I would say that uh, uh, practically not possible to produce as a single units and we sell it, right? So that's mainly a batch costing method that we apply, right? So now what could be example for the product? What could be example of the product where batch costing is a suitable method, right? The example is snacks. The companies involved in producing snacks, right? You know that snacks normally sell in a packets, right? In packets we have different pieces, right? So it's doesn't make any sense if you sell a single piece of snack, right? They don't sell it, right? So it's always sell in a packets, in a patch, or in a batch, all right? So for that kind of business, we apply batch costing method. Another example is medicines, pills, right? Pills also comes in a particular batch or particular packets. Company never produce a single pill, right? Company produce in a batch or packets or bottles. It depends, all right? Another could be uh, ready-made garments, clothes, like as t-shirts or jeans or shorts, right? So that's kind of businesses company always produced in a batch. One batch for a small size, one batch for XL, double XL, triple XL, so on. Right? Same with the shoes. Whenever company producing a shoes, company produce in a particular batch. Right? So for that same different size of the different kinds of shoes, right? So that's example of the batch costing. Maybe some other products like as I don't know, like as M&M, like small chocolates, right? So we buy that M&M, and of course we don't buy as a single because nobody sells, all right? And it is not possible to produce a single M&M and sell it, all right? So companies sell in a particular packets, and company produce in a batch and sell in batch, all right? So that's kind of method, that's kind of product company adopt a batch costing method, right? Now move on to number 3, which is contract costing. So what is the requirements or criteria to apply contract costing? In order to apply contract, as you can see the contract, contract costing we apply for the product. Product is a construction in nature. Construction in nature, right? Second one is people normally buy as a single, right? And products are unidentical. Products are unidentical, and products have a long time durations. Right? So you can see that there are quite similarities between job costing and contract costing, except one thing. The major difference between applying job costing and contract costing is a time. And of course, this is not a construction in nature, right? Here, of course, in job costing, short time. And in contract costing, it takes a lot. So in contract costing, it takes a long time to uh, to produce product. So that's mainly the major difference between job costing and batch costing. All right. So now, what could be the example of contract costing? As I said, this is construction in nature. So it could be a house, could be streets, could be skyscrapers. I mean, multiple floors buildings, like as Landmark 81 or Bitexo Towers in Ho Chi Minh City, right? So these are the example of the roads, streets, any kinds of. Okay, so that's all about contract costing. So keep in your mind any kinds of product which has a construction in nature. That's in that method we're gonna apply a contract costing. But of course, it's different. It's different than the job costing because of course the time durations. Job costing, the product belongs to job costing, doesn't take too long to get ready. But the product which is construction in nature, like as house or buildings or roads or streets or bridges or flyovers, right? So that's kind of products cannot be prepared in very short time. Right? It takes too long. Like as we can the example of the metro rail in Ho Chi Minh City. It has been constructing from, I guess, maybe from the last 3 to 4 years, right, minimum, and then until now it hasn't finished, right? So it takes really long process, right? So that's the ideas behind contract costing. Now we move on to number 4. The fourth costing method for manufacturing company is a process costing, right? Process costing. So in order to apply process costing, again, we have some criteria or requirements. The major criteria or the requirements to apply process costing is any kinds of product which has a multiple process, and that process gives you byproducts, not only main product. Now, what is byproduct? Let me give you example. What is byproduct? So I repeat, process costing is the costing in which we apply for those products which has a multiple process, right? Which cannot be produced without process. Now, what does it mean, process in nature? Process in nature means product has a different raw material, not just a one raw material. We are adding first raw material and then second, then third, and so on, right? But product cannot be produced or finished in one raw material. It needs multiple raw material. We have to add it, multiple material we have to add it to get it ready, right? So that's the meaning of process, right? So it has a multiple materials, different types of material we have to add in to get products ready, right? And this Second thing is labor. There is no any just one person or one kind of person involved. In this product, different kinds of people involved who has a different skills, right? So just not a one person who can do only one thing, because that person will do one thing, and when that product become to next level, next process, another person, another material, all right? Third process, another person, another material, all right? So that's the meaning of process. And of course, material, labor, and overheads, right? So idea is that product has a different processes, different level, and each level has a different material, different labor, and different overheads. Direct material, direct labor, and overheads, right? That's the meaning of product is has a process, right? Now, what is another criteria is that process, each process or in the process of producing product, we has a byproduct, right? Now, what is byproduct? Okay, uh, let me draw a diagram, right? So let's say we have a raw material. We bought a raw material. Then we have process. We're gonna produce product. Process 1, process 2, process 3, and we finished. So remember, so let me write down here. Remember, if you wanna produce product, it has a 3 steps. Step 1 is buy raw material, right? Step 2 is start producing. And step 3 is product is finished, means product is ready to use, and then packaging, labeling, distribution, transportations, right? This is the step. So remember, we buy raw material first, right? And then work in process, and then finish goods. So these are the steps involved to produce or manufacture the product. I repeat, working process means producing, right? Let's say you buy vegetable, it's your raw material, you put in pots, you turn it on the stove, and you cook it. So time of cooking called working process. And then you're gonna add some spices, some kinds of other vegetables or any other thing. And then cooking finish, vegetable is ready, all right? So buy vegetables, start cooking, and cooking finish. So that's called finish. Raw material, working process, and finish. So that's mainly the nature of the product production, right? Okay, so here is an example. So let's say instead of giving vegetables example, I'm gonna give you some other practical examples that help us to understand what is byproduct, right? Let's say my product is a petrol. You know petrol? We use it for vehicles, or petrol or fuel, right? So petrol is the product, right? That's the main product. So finish means it's a main product. That's we need it, right? That's we wanna produce it. In order to produce this, we need a raw material, right? So raw material, to which raw material we require to make petrol, right? So the raw material called crude oil, right? Crude oil is a black or thick oil, right? That's petrochemical companies, they extract from the sea, like as PV oil in Bungtao, all right? So what they do, they extract raw oil, we call it crude oils, they extract from the sea, and then they got crude oils, they're gonna process, right? They're gonna add some chemicals, or they have to cross the different processes, right? They have to go through from the multiple steps, and then finally petrol is ready, right? So we have raw material, right, and work in process. So let's say we have three process: process 1, process 2, process 3, right? Of course, in each process, you're going to add some extra chemicals. We need different level, different engineers, right? We need different engineers who extract the raw material. And then different engineers, they add different chemicals using different machines. So material, labor, and different expenses, overheads, right? So now, what is byproducts? So remember, byproduct is that product which comes out during the process, even though you do you do not make efforts to get it, because you are making efforts to get petrol, right? But when you are producing petrol, the process gives you a different kinds of products automatically, right? Like as they're gonna give you engine oil, that oils that we require for our engines, right? Another ones could be some other kinds of chemicals that mainly we use it for Vaselines, or use for other kinds of things, or medical things, right? Or maybe airplane oil or diesels, right? So these are the products that's automatically out. So we use raw material, right? Automatically the product is getting out. Even though you don't make it efforts, it's automatically part of process, because you are processing, all right? You make it crude oil thinner. You want to make it thinner, some other products will be out. That product's called like byproduct. That's the meaning of byproducts, all right? Now, and after processing all these kind of things, then finally we got the main product, right? So remember, byproduct is not main products. We are not making efforts to get byproducts. It's automatically out, all right? So what is the nature of byproducts? The byproduct nature is not a main products. It's not a main product. It's just a side by side. We get it. Second thing is a maybe market value of this byproduct is lower than a main product. Market demand or market value compared to main product, it has a low value. It has a less value, all right? Keep in your mind here, I'm just giving you example, and don't say that engine oil has a more demand compared to petrol. I'm just trying to give example because I'm not an engineer. I do not know the process. It's just ideas to understand this process costing, all right? So just take it normal examples, all right? Not from the engineering point of view. So mainly the market value of byproduct, which is this, is lower than the main products. Its value cannot be higher. If its value is higher than the main products, then you focus on byproduct. You're not going to focus on the main product. So byproduct become main products, right? If it has a high value. Of course, we do not need to produce petrol if engine oil is more profitable for me. Engine oil has a more demand in the markets, right, compared to the petrol, right? So byproduct is not a main product, and of course, its market value is lower than the main product. So market value means, of course, market price, could be demand, or could be a profit. Profit of this product, of course, higher compared to this. This has a lower profit compared to the byproducts, right? So that's kind of examples is the best suitable examples for process costing method. So we can take another example in which has a multiple process and the process gonna gives you byproducts. The example is sawdust. I mean, no, not sawdust. Example is making a table. All right. If you want to make a furniture, what we need it? We need a raw material, which means timber, which means we cut the tree. All right. Tree or timber is the raw material. Right. So let's say tree or timber is the raw material. Now you get the tree, you're gonna cut it, you're gonna peel it, or you're gonna make it smooth. So when you are doing multiple processes to make furniture, so furniture is the main product, right? And raw material is the timber or tree. So then we're gonna do different processes. We're gonna peel it, process 2, process 3, all right? So these process gonna give us various byproducts. So the first byproduct is a small piece of wood, right? So that small piece of wood could be used as a fuel. In villages or in some cities, people use the small piece of woods, right, to burn, to cook foods or some other things, right? Another could be a saw dust. It's very sprinkle woods, right? It's very, very thin or very sprinkle. We also call it, yeah, so mainly sawdust is the right word for that kind of things. What is the use of that one? For architecture or decorating or some kinds of interior things. Some architectures, they use that kind of sawdust to decorate something, right? Another one, some other small, the skin of the tree. Tree skin, normally we use for plantation. So it's used as fertilizers, right? So that's also a byproduct. Even though we are not making extra efforts, so our purpose is to make a table. But when we are making a table, we're gonna peel it, we're gonna cut it, we're gonna shine it, so on, right? And then finally, we comes to the furniture. So these are the byproducts. And of course, they are not the main products, and the market value or demands is lower than the main products. So that's the example to understand the process costing. If your products comes in these kinds of process or these kinds of categories, yes, you will apply a process costing because it's require multiple steps, right? So that's all about process costing. Okay. So did you understand process costing? Is it clear? Which kind of companies or businesses apply process costing? Say something, yes or no? Is it clear? Any question?
Yeah, it's clear.
Any question?
No, teacher, I don't have question.
No question.
So can you talk again about the byproduct? Because I still feel confused about that.
Okay. So yeah. I repeat, byproducts are those products which normally out or which normally we get it without making any efforts, without making additional efforts. We do not make additional efforts. All right, it's just a process. Things are coming out. When you are in the process of making more product, things are coming out. So that thing's called byproducts. Because still it's a product. Still people demand for it. But the demand is lower than the main product. But still people need that. Some kinds of customers, some kinds of markets we have for that kind of product. But of course, market is significantly smaller compared to the main products. That's the ideas for the buy. Buy means side by side. We get it side by side. We're not just only getting the one product, we're getting something else side by side, this main product. All right, that's the meaning of byproduct. So main product, byproduct. All right, so that's all about your costing method for manufacturing. All right, so manufacturing is finished. Now we move on to the last costing method, which is for non-manufacturing, which is service costing. Right, service costing. Now, as you can see, it's service costing. It's mainly applied for those products which are intangible in nature. So we don't call it product anymore. We call them services, right? And in order to understand services costing, we need to understand the characteristics of the services. So all services, they have a same characteristics. First one is intangibility. All we can't see, we can't touch, right? So all services, they have, their character is, all are intangible in nature. Intangibility is the characteristics of service. Second one is a durability. Durability means you cannot store in advance. The meaning of durability means something that you can use in a long term, right? But services, you cannot store it, so you cannot use in advance. I mean, you cannot use in future, right? The example is, for example, haircuts. We cannot get haircuts in advance for whole year. For next, let's say we're gonna get haircuts after 2 months. So we cannot get haircuts for whole years. Of course not. We need like 6 times in a year and time by time. All that 6 time haircuts, we cannot get it in advance, all right? That's the meaning of cannot be stored, right? Another example is teaching. Teaching is also services. I'm giving you service, right? I cannot teach you all the sessions in one day, all right? I have to teach you step by step. So whatever information that I'm giving you, you can digest it. And then you understand, and then we move on to the next topic, all right? All information I cannot deliver to you at one time or in one day. We need a time to time, all right? Same thing with your studies. When you get service, when you get knowledge from university gonna give you curriculum. So we're gonna follow that curriculum step by steps. You're gonna study some subjects, like as in your BTech, you study English, level 1, 2, 3, whatever. And then you comes to your business, which is BTech, and some startup courses you study first, like as principle of marketing, principle of accounting, and so on. And then you go to the middle level, financial accounting, management accounting, and so on. And finally, you go to the top up, all right? So they have a particular arrangement or setup, all right? All these things, all information cannot be provided at the same level or cannot be provided together, all right? That's the meaning of durability, all right? Another example is services are not predictable. You cannot predict services in advance. You don't have a, I would say, that opportunity to check whether service good or bad. For example, you go to buy a mobile phone, all right, which is tangible in nature. So before you buy mobile phone, you're gonna check it. You're gonna test it in advance. If everything is good, you will buy it, all right? But for example, you're gonna get a haircuts, right? So you cannot predict the services hairdresser gonna give it to you. Is completely unpredictable, right? Maybe the way that they cut hair, or after getting haircuts, you like it or you don't like it. So you have no, even though you give directions, I want this, I want that, you give some all kinds of informations. But maybe that person is experienced or inexperienced, you don't know. If the person is experienced, good service for you. If person is unexperienced, he's not gonna give you good haircuts as you expected, service down. That's the nature of all kinds of services, all right? So that's called predictable, right? And another one is next one is a simultaneously. So can't be stored, cannot be advanced, intangible. I think that's enough for us to get the ideas of the nature of the service, right? So now, what kinds of businesses in which we can apply service costing method, right? What kind of businesses we have? So, of course, any kinds of business which involve in providing services, right? Providing services, not involved in production at all, right? So that could be, let's say, banking or banks, right? Could be universities, right? Or schools, or any other kinds of education institutions, right? Next could be transportations, right? Tourisms or travel, or tour and travel. Could be hotels, but of course, hotels, you're just gonna take only service, not involved in any kinds of providing foods and all this kind of. Restaurants, not a service, they are a combination of product and services both, right? So maybe some other businesses like as hospitals, right? Hospitals providing us services, right? But many will say that they give us medicines as well. Of course, they give us medicines, but they are not producing medicines. Medicines are not produced by the hospitals. Medicines are produced by the medicines company. We call them pharmaceuticals, right? So these kinds of businesses, their product or they providing the services, intangible product or services, right? And they apply a service costing method, right? So that's the ideas behind your second session, right? So second session is finished, all right? Second session is finished, which is different types of management accounting. So before we move on to the third session for your learning outcome 1, do you have any question? Anybody has any question? Say something, any question, or move on?
Moving on, please.
No, teacher.
Question, teacher.
Yep. Any question?
No question,
No
teacher.
question. So
No,
we
sir.
Any question? Yes or no? Say something quickly, or we move on. Move on. Okay.
Move on, teacher.
Yeah.
No, teacher.
Okay. So now we move on to the the third session or third part of your learning outcome one. If you have a look your guideline for the first session. So the third one is the presenting financial informations. Presenting financial informations, right? In this presenting financial information, we're gonna study two things, right? The first thing is the types of users we have, right? Internal and external users. And second thing, we're gonna study about different types of reports as per management accounting system, right? By behavior or by nature, or by functions and so on, right? So let's start with the first one. So let's say it's A, right? So which is users. Now, who are the users? Users are the people who use or read financial statement or financial statement means the statement which provides us financial informations, right? Financial statement is a statement which provides us financial information, profit, loss, sales, and so on. Okay. So users are the people who use or read financial statement for what? For decision making, right? Decision making. What decision making? It depends upon nature of the user, right? So when I come to the nature of the users, then I will explain you what kind of decisions users they have to make it by using financial information that comes from financial statement, right? Okay. Now, next one is types. How many types of users we have? We have two types of users. Internal and external. All right. You can see the name internal and externals. Internal users within the company and external users outside the company. In simple words, we can say that. But if I say inside the company and outside the company, this explanation may not clarify the difference, exact difference between internal and external users, right? So instead of saying inside and outside, I will say that internal users are the people who involve in day-to-day business activity, all right? The people who are involved in day-to-day business activity, those people known as internal users, right? Remember, day-to-day business activity. In simple words, we can say that internal users mainly are the people who comes in company on regular basis, every day, 5 days in a week, right? So these kinds of people known as internal users involved in day-to-day business activity, right? And external users, of course, are the people who are not involved in day-to-day business activities. They do not come to company on regular basis, right? Or daily basis, right? Or weekly basis, right? So these kinds of people known as external users, right? Okay, so now what are the example of internal users. Right? Internal users involve workers. That's mainly the bottom management or the bottom level of people in an organization. They're mostly involved in a production process. Right? Could be managers, like as human resource manager, account manager, marketing manager, production manager, purchase managers, all kinds of people, they are involved in managing things, administration work. Right? And third one is a top level of people. Right? Could be a chief executive officer, could be a director or chairman or vice president and president, so on. Right? These kinds of people are known as internal users. Why internal users? Because they involve in regular activities. They involve in day-to-day business activity, or they comes to company every day, right? Now, next is external users. Who are the external users? External users involve shareholders, right? It's involved banks, it's involved suppliers, customers, and maybe government. Right? Shareholders, banks, supplier, customers, government. So these are the external users. You can see that these people not involved in day-to-day business activity. They comes to company, but may not on daily basis. Let's say being a customer, we don't go to company to buy product every day. Depends whenever we need it. Could be once in a week, once in a month, once in 3 months, and so on. All right. So these are the external users, so internal and external, right? So now we move on to the next, which is decisions, right? Decisions. But before decision, of course, we will have a look what financial informations they need it, and using that financial information, what kind of decision they're gonna make it, what informations they need, and what decisions they're gonna make it, right? So before we move on, okay, so let's start with the worker. So what informations they needed and what kind of decisions they're gonna make it, all right? So of course, worker are the people involved in manufacturing the products. So they need informations about what kind of products they have to produce, how many products they have to produce in a day, right? So informations about production. Need the informations about production, and they will make a decisions that whether they can complete their production or not, right? Now, managers or middle managers, what financial information they needed? They need financial informations, or they get financial information which is provided by the top managers, because they are in the middle. Top managers give informations to the middle managers. Middle managers, they try to provides that information or transfer information in a such way to lower managers or lower workers or lower level of people in organizations that they can understand it, right? So they require informations from the top managers, and they make a decisions whether bottom managers are able to follow that kind of information, or lower manager of people, they're gonna get this information in the easiest way or not? How they can translate, or how they can I would say that transform informations to that level, so the workers, they can easily get that information, all right, in order to make a right decisions. Now, CEO or the peoples, they are involved in decisions about what to produce, what not to produce. In other words, I will say that policy making, strategies, all the kind of important decisions, they have to make it time to time in order to maximize the shareholders' value, in order to maximize the profitability of the company, in order to maximize the demand of the product in the market, and so on. Innovation and all these kind of things, the CEO involved, right? CEO, director, and presidents, right? Now, shareholders. Shareholders, what information they needed? Of course, financial related informations about company profit, about company assets, about company finance, and what decisions they're gonna make it. They're gonna make investment decisions to make invest, right? Whether they should invest or they should not invest. Banks, they involve in lending money. So they're gonna make decisions whether they should lend or not, right? So by looking at company regular cash flows, by looking at the company debts and assets, these kinds of banks, they are involved in making decisions. Suppliers are the people who involve in supplying materials to the company, right? So they involve in making decisions whether they should provide or should sell products to this company or not, right? Of course, they are looking at the company cash, regular cash transaction or cash level of the organizations. So make sure they receive their money, they receive their cash on time. So that's information they needed to decide whether supply or not. Now, customers, they're gonna make decisions whether buy or not, right? So what information they needed? They can get some informations like receiving some sales or revenue informations from company financial statement. If company has a high sales, so means many customers, they are buying company products because there is a good demand of product. Why good demand? Because good quality, right? So as a result, they will be able to make a right decisions whether we should buy this product or that product, right? So this is the customers' decisions, right? And finally, governments, they are much more involved in the implementation of new tax law, policies, rates for the organizations. They need some information, right? Financial information, so they will be able to make a appropriate or right decision that how much tax they should charge or collect from the different type of organization. In simple words, if company is making profit, they have to pay the tax as per the tax rates announced by the tax department, or if they're having a loss, of course, they don't have to pay any tax, right? So that's kind of informations governments, they need to provide to companies, right? Okay, so these are the ideas for different kinds of users we have. Right? Now we conclude users which are internal and external. So remember, management accounting is a process that helps to provide financial information So remember, management accounting is a process which provides information to internal users. So I have to write here, internal. Right? And here, external. So management accounting is a process that helps to provide information to internal users. And financial accounting is the process which helps to provide financial information to the external. I think this thing I already explained to you before, but anyway, I repeat, management accounting provides information to internal users, and financial accounting provides information to the external users. So financial accounting, they use financial statement. So in other words, we can say that financial statement, in order to prepare financial statement, we need a support of financial accounting. So financial accounting help us to prepare financial statement, right? It's a process of preparing financial statement so that financial statement can be delivered for external users as the financial information to provide to help them to make a right decisions, right? And internal users, they also need internal users, they need a financial information. So management accounting prepares some kinds of report that help internal users to make financial decisions, right? So of course, they're gonna prepare some reports, all right? They're gonna prepare some reports that help internal users to get financial information to make financial decisions. Financial accounting prepare financial reports. We also call it financial statement. Financial reports. And these financial reports provide information to the external users, right? Now, what kind of reports management accountant or accounting they prepare to provide information to internal users, right? These reports involve management accounting reports by function, right? By function, reports by function, and by behavior. All right, by function and by behavior. So they may need these two types of financial report to make decisions. All right, but in financial accounting, we just need a one report. Of course, in this report, you have 5 elements, but this semester, you are not studying financial accounting, right? It's for next semester. This semester, we focus more on management accounting, all right? So now, the question is how we prepare these two types of reports, what these two types of reports are, right? So that's I'm going to explain you. So this is 3B. Sorry. That's 3B. All right. So 3A is the types of users, and 3B is different reports used by management accountant to provide financial information to internal users, right? So let's talk about 3B now. 3B, which is types of reports. So let's start with the by function. Or we can say that income statement by function or income statement by behavior. Where income statement means any kinds of information that's provide us information about income and expenditure, which means profit and loss, sales or expense, and so on. Right? So by function, how reports looks alike. So of course we have sales. I don't remember I explained you in the previous session this thing or not. No, I think I haven't explained you this thing. Okay. No, I haven't talked about this. Okay. So we have a sales and or revenue. Let me write down, then I will explain you which one. We have cost of goods sold. So this is your income statement, but this income statement is by function. So sales. Sales means how we estimate the sales. Sales means selling price per units multiplied by number of units, right? So let's say selling price of one pen is $10 and company sell 1,000 pens, 1,000 products. So my sales or my revenue is $10,000, right? That's the meaning of sales revenue. So sometimes we also call it turnover, right? Now, cost of goods sold. You also know that cost of goods sold, but I quickly explain you. Cost of goods sold means manufacturing cost. Manufacturing cost. In this manufacturing cost, we have some costs are fixed manufacturing, and some cost variable manufacturing. Fixed manufacturing means supervisor, cost of supervisions, the previous session, right? Cost of supervision, depreciation, rent, maybe insurance. These are the fixed manufacturing, all belongs to factory, right? Variable manufacturing means direct material, direct labor, or some other kinds of direct expense. These are variable manufacturing cost, right? Fixed and variable. So we call it total manufacturing cost, right? Now next we have a gross profit, right? What gross profit tells us? Gross profit tells us about product profitability, all right? Product profitability. Product profitability means, is this product is a profitable to produce or not profitable to produce, right? Means we should continue our process or we should stop processing product because this product having a loss. If your sales is more than cost of goods sold, right? Cost of goods sold. This product is profitable. This product is in profit. So we should continue. Continue means continue with the different process, packaging, labeling, and so on, right? If sales is less than cost of goods sold, let's say sales is $9 and cost of goods sold is $10, then our product in loss. So we should not continue. We should stop working on that product because that product is in loss. Because if you work more costs occur, more loss occur. So don't touch it, just leave it. Try to find the way to minimize the cost for the future products, right? So that's the ideas behind gross profit. So this could be a gross profit or this could be a gross loss. It depends, all right? Product profit, product loss, right? So once we got gross profit, then we're going to spend some other kinds of non-manufacturing cost. We also know that non-manufacturing cost. Non-manufacturing costs involve administration, marketing, advertising, packaging, labeling, distribution, and so on. These kinds of costs involve in office, right? All this kind of cost involved in office. Of course, some non-manufacturing costs are fixed and some non-manufacturing costs are variable. So fixed could be a salary for IT department, salary for human resource department, right? Depreciation for the machine which is used in office, insurance paid for office, rent for office, right? So these are the fixed non-manufacturing costs. And variable non-manufacturing cost could be let's say, marketing, advertising. We do more marketing, more cost, less marketing, less cost, all right? Next, it could be packaging, labeling, distribution, more product, more pack, more label, more cost, right? So these are the non-manufacturing variable cost. So once we got these costs, then we gonna find net profit. So idea is sales minus cost is profit or loss or break even, right? Cost means cost of goods sold and non-manufacturing. So manufacturing cost and non-manufacturing cost is the total cost. So sales minus total cost is net profit, right? Profit. Profit means, of course, sales more than cost. Loss, sales less than cost, right? Break even means no profit, no loss, which means sales equals to total cost, right? So break even. So this is the way to understand it. By function means organizations have a two main function, manufacturing function and non-manufacturing function. So by using the cost of manufacturing and non-manufacturing, we're gonna understand how much profit company gonna make it, all right? So that's the ideas behind cost by function, right? So now move on. So 3B is by function. So 3B by behavior. So we have started with the same. So by behavior, you study in the previous session when we talk about types of cost, you studied in the previous session that by behavior means cost divided into two parts. I mean, it's various parts, fixed, variable, semi-variable, and step, but we summarize it. By behavior, cost divided into two parts, fixed cost and variable cost, not manufacturing, not non-manufacturing. We focus on fixed variable. So remember, by behavior means we focus more on fixed variable. And by function, we focus more on manufacturing and non-manufacturing. So let me write down, by function, we focus on manufacturing and non-manufacturing cost. All right, we focus on manufacturing and non-manufacturing. And by behavior, we focus on variable cost and fixed cost. right? So now here, let me prepare income statement by behavior, right? Or financial reports or reports for management accounting by behavior, right? So first thing is the same, which is sales or revenue. Once we have sales and revenue, then we have minus total variable cost. In this total variable cost, we have manufacturing variables, direct material, direct labor, direct expense, and non-manufacturing, which is marketing, advertising, packaging, labeling, distribution, right? So sales minus variable cost is not a gross profit. We don't call it gross profit. We call it contribution margin. Contribution margin. Only variable cost contribute to estimate the profit. This is called contribution margin, right? So sales more than variable cost, contribution margin, right? Which is profit. Sales less than variable cost, which is loss. Then minus fixed cost. And this fixed cost divided into two parts. Manufacturing fixed cost, depreciation, rent, insurance, cost of supervisions, so on, right? Non-manufacturing fixed cost, administration cost, mainly salaries, depreciations, and so on, right? So once we subtract this, then we reach to the net profit. Net profit, right? So this is called by behavior. In by behavior, we focus on the behavior of the cost, how costs behave. Some costs change as per the level of activity change. This is called variable, right? Some costs don't behave. I mean, there is no any movement in that cost. That's known as the fixed cost, right? So after subtracting, that's variable and fixed cost, we reach to the net profit, right? So you remember by behavior and by function for future, right? Because we're gonna have a learning outcome 2. I mean, next session, or next to next session, it depends. But I think next week we will cover using these two different kinds of formats: income statement by behavior and income statement by function. So remember this thing, right? Okay. So now the question is why we allocate cost into variable and fixed. Why not manufacturing and non-manufacturing? The reason is that the arguments to divide cost on the basis of behavior, the arguments is that variable cost contribute in production, because direct material, direct labor, direct expense directly involved, contributing to maximize the production, right? Variable cost, which is non-manufacturing, marketing, advertising, packaging, labeling, distribution. These costs contribute to increase the revenue. variable manufacturing cost, let me write down here, manufacturing, right? Here, non-manufacturing. So variable manufacturing costs contribute in production. Variable non-manufacturing costs contribute in sales. Why? Marketing, advertising, more advertising, sales increase. Packaging, labeling, distribution increase, delivery of the product increase, sales increase. Right? So they contribute. There is a contribution of variable cost. So that's why it should be separate from fixed cost. Fixed cost do not contribute in production and sales. Like as fixed manufacturing, supervisions, they are not directly involved in production, right? So they are not involved in any kind of direct contribution to maximize the production. Of course, they are important, but they are indirectly involved. Same thing with the administration, accounting, depreciation for the machines or office items, right? So they are not directly contributing to maximizing either production or revenue or both. So by that reason, we're gonna separate them to find out whether which one directly help us to maximize the profitability of the company. Another way to keep them separate is controllability and uncontrollability point of view. We can control fixed cost. In the previous session, I explained you by decision making, controllable, uncontrollable, right? And fixed cost is uncontrollable, right? Fixed cost is uncontrollable. That's also the arguments that says that it should keep them separate. No matter is a combination of office cost, production cost is not important. Office cost, production cost, not important. The important is contribution. All right. So that's why using variable cost, we get it contribution margin. All right. However, by function, so in order to complete this product, there are two functions involved: manufacturing, material, labor, direct expense, so on, and non-manufacturing, which is marketing, advertising, packaging, labeling, distribution. So that's why we are allocating on the basis of office and factory, because the task has been performed in factory and office. They are significantly different from each others. All right, so that's why we're gonna allocate on the basis of manufacturing and non-manufacturing. But in the behavior, we're gonna allocate on the behalf of variable and fixed. All right, that's all. That's all for topic 3. All right, so topic 3 is finished. So means that's enough for today's lecture. So which means learning outcome 1 is finished. So in next session, I mean next week Monday, I hope you know the schedule. So next week Monday morning we have a class 8:30 in City Campus. All right, so next week Monday I will discuss about your assignments. All right, so I forgot to send you assignments, but I will send to Miss Nguyen, and Miss Nguyen will send it to you. All right, so next week Monday we will discuss about assignments, but of course before discuss, if you have any question regarding lecture 1, 2, 3, you can ask me a question. All right, so, and one more thing, be careful when you bring your assignments with you next week. Make sure you bring hard copy. All right, not just keep assignments in your mobile phones or in your laptop. All right, keep in your mind, bring hard copy. If you do not have hard copy, I'm sorry, I have to give you absent. All right. So if you don't have hard copy, don't come to the class. All right. Everybody understand? Say something, yes or no?
Yes. Yes.
Okay, so
Yes.
I will check personally one by one, everybody. All right. So make sure you keep hard copy with you, right, of your assignment scenario. So I will send email to Miss Green, and hopefully she will send to you soon, and then next week you can get it. All right. So that's all for this session. So do you have any question regarding this session? Anything is unclear to you? So I quickly summarize it, what we learned in this session. So first thing we learned in this session is a costing method, 5 different costing method, 4 costing method for job costing, for manufacturing, which is job, batch, contract, process, right? And 1 method for non-manufacturing, which is service costing, right? Then we move on to the third session. Third session is a presenting financial informations, right? So we study 2 things. First thing, we present financial information to 2 types of users, internal and external, all right? And why users need information? Of course, for different decision making, they have to they need the information, right? And after users, we talked about the financial report, reports that help provide informations to the users, internal users. So we study reports by functions, manufacturing, non-manufacturing, and by behavior, variable and fixed. All right. So that's all about your session 3 or lecture 3. All right. So any questions you have? Anybody has any question? Say something.
No question.
Questions. So I forgot. I'm gonna see you this Thursday. Not of course Monday. So I remember. I repeat again. You have 1 more class this week. So next class gonna be on Friday, right? Yes or no? Did you receive?
Yes.
Did you receive invitation? Friday class, right?
Yes.
Yeah, in your previous email, the email I sent you before, make sure you check that email. The email I mentioned about invitation for this session and Friday session. So make sure you check it again, all right?
Yeah.
Okay, so do you have any question?
No question.
No questions? So can we stop here?
Yeah.
Yeah.
So we stop here. I'll see you on Friday, Zoom meeting, all right?
Yes.
I'll see you on Friday. Thank you. Bye-bye.
Thank you.
Thank you, teacher.